Right now, across Britain, just over 1 in 10 renters between the ages of 20 and 44 can actually afford to buy a home. If you're single and renting, that number drops below 3%. Think about that for a second. We're not talking about buying a mansion in Kensington. We're talking about a basic starter home, a 2-bedroom flat, somewhere to call your own. For 97% of single renters in their 20s and 30s, that dream is mathematically impossible. And this isn't just a housing problem anymore. What we're watching unfold is an economic time bomb, one that's been ticking for decades, and the countdown is accelerating faster than anyone wants to admit. The cracks are already showing everywhere you look. Families who thought they'd made it, who bought homes during the pandemic when rates were at historic lows, are now facing mortgage renewals that could destroy them financially. Corporate giants are sweeping in, buying entire developments before ordinary buyers even get a chance to view them. An entire generation has been priced out so completely that home ownership has become a privilege reserved for those with wealthy parents or extraordinary luck. And here's what makes this truly dangerous. Every single piece of this puzzle is connected. When one part fails, the whole system shakes. And right now, multiple parts are failing at once. The mortgage shock hit Britain like a freight train, and most people never saw it coming. Back in late 2021, the Bank of England's base rate sat at just 0.1%. Mortgages were cheaper than they'd been in human history. Young couples, first-time buyers, families upgrading, everyone rushed in. Why wouldn't they? A 30-year mortgage at 1.5% felt like free money. Fast forward to today, and that same Bank of England base rate has climbed past 4%. For homeowners who fixed their rates during the pandemic, reality is about to hit hard. Imagine this: you're a family in Reading, both parents working, 2 kids, modest 3-bedroom semi. In 2021, you locked in a 2-year fix at 1.8%. Your monthly payment was £875. Manageable, comfortable even. Now your fix is ending, and the best rate you can find is 5.2%. Overnight, that same mortgage jumps to £1,430 a month. That's an extra £555 every single month, nearly £7,000 a year. Where does that money come from? Do you cut back on food, cancel the kids' activities, stop saving entirely? For thousands of families across Britain, this isn't a hypothetical scenario. It's happening right now. And it's not just about individual pain. Mortgage approvals have been falling short of expectations month after month. Repossessions are creeping upward. The numbers are still relatively low, but they're moving in one direction only: up. The fear isn't just about today. It's about what happens when tens of thousands of families hit that renewal wall in the next 12 to 18 months. When large numbers of households can't meet repayments, banks start to strain. When banks strain, the entire financial system feels it. We've seen this before. It never ends well. But here's where it gets even darker. While ordinary families struggle to hold onto their homes, a new breed of buyer has entered the market: corporate landlords. We're not talking about small-time buy-to-let investors with a couple of properties. We're talking about banks, pension funds, asset management firms with billions in capital and one singular goal: turn British housing into a permanent income stream. Lloyds Banking Group announced plans to own 50,000 rental homes by 2030. Legal and General is pushing aggressively into build-to-rent, aiming for thousands of units annually. Grainger, one of the UK's largest residential landlords, already manages over 10,000 properties. And lurking in the background are global giants like BlackRock, linked to large-scale acquisitions across the UK housing market. These aren't property enthusiasts. They're financial institutions that see housing the same way they see stocks, bonds, or commodities: as an asset class that generates reliable returns no matter what happens to the economy. And here's the twisted part: they have advantages you and I will never have. They pay cash, so they don't need mortgage approvals. They buy in bulk, entire developments at once, often before those homes ever hit the open market. here's the real kicker. When you buy 6 or more residential properties in a single transaction, you qualify for lower stamp duty rates, far lower. An individual buying a second home pays 3% on top of standard rates. But corporate buyers purchasing in bulk, they pay a fraction of that. The system is literally rigged to favour billion-pound institutions over working families trying to buy their first home. Why does this matter? Because every home bought by a corporation is one less home available to a family. These properties don't cycle back into the market. They become permanent rental stock, held indefinitely, managed for maximum yield. For investors, it's steady income. For families, it's another barrier, another door slammed shut. And as more homes move from ownership to corporate rental portfolios, the dream of home ownership doesn't just get harder. For millions, it disappears entirely. Let's talk about generation rent, because this is where the true scale of the disaster becomes clear. In 2001, roughly 59% of people aged 25 to 34 owned their own home. It was still achievable. You saved, you sacrificed, you got on the ladder. By 2025, that figure has collapsed to just 29%. Home ownership among young adults has been cut in half in just over 2 decades. Half. This isn't a temporary blip, it's a structural collapse. And it gets worse. Only 8% of non-homeowners in that same age group have enough savings for even a 10% deposit. Not a full 20% deposit, just 10%. Nearly half, 48% to be exact, have less than £1,000 in the bank. How do you save for a deposit when average UK house prices sit around £271,000, requiring £27,000 just to get started, while your rent takes half your income and inflation eats the rest? The answer for most people is simple. You don't, unless you have help. Over 64% of first-time buyers in 2024 relied on the bank of mum and dad. That's up from just 27% a decade ago. If your parents don't have money, if they can't remortgage their home to help you, if there's no inheritance coming, you're out of luck. Home ownership in Britain has become a hereditary privilege. If your parents own, maybe you will too. If they don't, you probably never will. This isn't capitalism. It's a new feudalism dressed up in modern language, and this matters beyond individual dreams. When an entire generation can't build equity, can't invest in property, can't access the wealth-building mechanisms their parents took for granted, the economic consequences ripple outward. It delays family formation, weakens communities, kills entrepreneurship. How do you start a business when you're spending 60% of your income on rent with zero security? How do you plan for retirement when you'll still be renting at 70? The social contract that held Britain together for decades, work hard, save, buy a home, build a life, has been shattered. And nobody in power seems willing to admit it. So how did we get here? Because this didn't happen by accident. This was built, piece by piece, policy by policy, over decades. It started in the 1980s with Right to Buy. Margaret Thatcher's government sold off millions of council homes, promising a property-owning democracy. And for those who bought, it was transformative. But here's what didn't happen. Those homes were never replaced. Local authorities weren't allowed to use the proceeds to build new social housing. The supply of affordable homes collapsed overnight. In the 1970s, councils built over 120,000 homes a year. By the mid-1990s, that number had dropped to just 1,400. 1,400 homes in a country of 60 million people. Then came New Labour in the late 90s and early 2000s. Instead of rebuilding social housing, they doubled down on financialisation. Buy-to-let mortgages exploded, encouraged by tax breaks and easy credit. Homes stopped being places to live and became speculative investments. Prices rose far faster than wages, but nobody cared because rising prices made everyone feel wealthier. Until it all came crashing down in 2008. After the financial crisis, you'd think we'd have learned. Instead, Austerity cut public spending to the bone. House building stalled. Governments introduced schemes like Help to Buy, which propped up demand without increasing supply, pushing prices even higher. And now, in 2025, we're living with the consequences. The stamp duty threshold is dropping from £425,000 to £300,000 in April, making it even harder for buyers. Help to Buy has ended with no proper replacement. Planning approvals are at their lowest in over a decade. The government promises 300,000 new homes every year, but in 2024, only 238,000 were delivered. Every single policy lever seems designed to make the problem worse, not better. And it's not just buyers who are suffering. Landlords are fleeing the market in droves, and that's creating a whole new crisis. 1 in 4 landlords say they're planning to sell up in 2025. Buy-to-let mortgage demand hit its lowest January level in 5 years. Why? Because being a landlord has stopped being profitable. Interest rates have soared. Mortgage costs have doubled or tripled. Regulations have tightened. Energy performance standards now require expensive upgrades. Tax relief on mortgage interest has been slashed. Section 24 tax changes mean higher rate taxpayers are hammered. For small landlords, especially those with just 1 or 2 properties, the numbers don't work anymore. So they're selling. And when they sell, tenants get evicted. Rental supply shrinks. And here's the cruel irony. Fewer rental properties means higher rents. Rents have jumped 8.7% year on year, the fastest pace in decades. Tenants already struggling to save for a deposit now face even higher rents, making it impossible to save anything. It's a vicious cycle, and it's accelerating. The same families being priced out of ownership are now being squeezed even harder in the rental market. There's no escape route anymore. This is why Britain's housing market isn't just broken. It's a systemic risk, a time bomb ticking down, and the fuse is shorter than most people realise. Housing isn't just bricks and mortar. It represents the single largest chunk of household wealth in the UK. For millions of families, their home is their retirement plan, their safety net, their legacy. When house prices rise, people feel wealthier. They borrow more, spend more, the economy hums along. But when prices fall, the opposite happens. Wealth evaporates, spending contracts, confidence collapses. Some analysts are now predicting potential price drops of up to 40% in certain scenarios. That would wipe out 15 years of gains overnight. If prices fall even 20%, which is entirely plausible given current conditions, the consequences would be catastrophic. Billions of pounds in household wealth would vanish. Homeowners would be trapped in negative equity, unable to move or remortgage. Banks holding trillions in mortgage debt would face serious strain. Pension funds heavily invested in property would take massive hits, threatening retirement security for millions. But here's the impossible dilemma facing policymakers. If they let prices fall, it triggers financial chaos. But if they prop prices up, an entire generation stays locked out forever. There's no good option anymore. Every path leads to pain, just for different people. Support homeowners too much, and renters revolt. Do nothing, and a crash could spiral into recession. Try to boost supply, and existing homeowners scream about their property values falling. Britain's housing market has become a loaded gun pointed at the economy, and every political party knows it. That's why none of them will tell you the truth, and the crisis isn't uniform. Different regions are showing different symptoms, but they all point to the same underlying disease. London prices fell 2.6% in August alone, taking the annual change to negative 1.6%. The capital, once the unstoppable engine of UK house price growth, is cooling fast. Meanwhile, December 2024 saw the first monthly house price drop in 9 months nationally. But up north, rents are soaring past 11% in some cities, creating entirely new pressure zones. Manchester, Leeds, Newcastle, places where housing was once affordable, are now experiencing their own affordability crises. There's no escape anymore. The crisis has gone national. If you can't afford London, you move out. But now, the places you move to are becoming unaffordable too. It's like watching a wildfire spread, consuming everything in its path. And the people making decisions, the politicians, the policymakers, the central bankers, they're all watching it happen, aware of the danger, but seemingly paralysed. Because stopping it would require admitting that the last 40 years of housing policy have been a catastrophic failure. The countdown is already underway. The signs are everywhere if you know where to look. The first time buyer market share fell 10% between January and August 2025. House builders are cutting construction targets by 15 to 20% as demand collapses. UK bond yields are now higher than France, Germany, even Greece. The markets are pricing in fiscal crisis, economic instability, potential breakdown. And all of this is happening while household debt sits at record levels and real wages remain stagnant. Something has to give. When affordability hits extreme levels, when entire generations are locked out, when corporate landlords control more and more of the housing stock, when government finances are stretched to breaking point, systems don't just bend, they snap. History is full of examples. Every empire, every economic system that allowed inequality to widen without limit eventually faced a reckoning. Sometimes it was revolution, sometimes it was collapse, sometimes it was war. But it always came. Britain isn't special. We're not immune to the forces that have toppled societies throughout history. And right now, we're walking the same path. Housing is the canary in the coal mine, the early warning system flashing red. When people can't afford shelter, when families are one paycheck away from homelessness, when the gap between rich and poor resembles the Victorian era, the social fabric starts to tear. And once it starts tearing, it's almost impossible to stitch back together. This isn't just about expensive housing. It's about decades of policy that favoured wealth over work, assets over labour, landlords over tenants, corporations over communities. It's about a financial system that inflates asset prices faster than wages could ever keep pace. It's about a political class that benefited from rising house prices while an entire generation was sacrificed on the altar of property wealth. And it's about a reckoning that's coming whether we're ready for it or not. The question isn't whether something breaks, it's when and who pays the price. Will it be homeowners watching their wealth evaporate in a crash? Will it be renters crushed under ever-rising costs with no hope of escape? Will it be taxpayers forced to bail out banks again? Will it be pensioners seeing their retirement funds collapse? Or will it be everyone, all at once, in a systemic crisis that reshapes Britain's economy for generations? Right now, Britain's housing market is a time bomb. The timer is ticking, the fuse is burning, and every month that passes without fundamental change brings us closer to detonation. The tragedy is that none of this was inevitable. We had choices, we still have choices. But making those choices would require courage, honesty, and a willingness to challenge the interests that have profited from this broken system. And so far, that courage hasn't appeared. So what do you think? Is Britain headed for a crash that will reshape everything? Or will governments and banks do whatever it takes to keep prices propped up, no matter the cost to the next generation? Drop your thoughts in the comments below. I read every single one, and I learn a lot from what you share. The more perspectives we hear, the clearer the picture becomes. And if you want to stay ahead of the spin, if you want the real story behind Britain's property crisis, not just the headlines designed to sell papers, hit that subscribe button. Share this video with anyone who needs to understand what's really happening. Because the more people who see through the noise, the harder it becomes for those in power to ignore what's coming. This is Property Reporter, bringing you the truth about UK housing and property news. Stay informed, stay critical, and I'll see you in the next one.